Show me the crypto. Show me the crypto. Show me the crypto.
In a world on the brink of disruption, two men will bring you clarity by interviewing some of the most intelligent and influential names in the blockchain world. Welcome to Show Me the Crypto with your hosts, Wade Patterson and Ulf Lonergan.
Well, hi there and welcome to Show Me the Crypto. My name's Wade Patterson.
And I'm Ulf Lonergan.
We're a couple of friends from Canada who love learning about cryptocurrencies and blockchain technology, and we're happy you're along for the ride. Whether you're a crypto virgin or you know your way around the block, we hope our interviews with some of the most intelligent and influential people in the space help deliver you with value. And on this episode, we're joined by Leighton Cusack, co-founder of PoolTogether, which is a no-loss lottery protocol built on Ethereum. If lotteries are considered fun but wealth destroying, and long-term savings accounts are considered boring but wealth creating, PoolTogether has found that sweet spot in the Venn diagram that combines the best of both worlds. Beyond co-founding PoolTogether, Leighton had the genesis idea to formulate PleasrDAO and contributes to several other DeFi protocols. Leighton, welcome to Show Me the Crypto.
Thank you for having me. That was a very kind intro. I appreciate it.
We're stoked to have you on, and I want to get started. I watched a few interviews, and a lot of them jumped right into PoolTogether, but I'm curious about you. How did you first discover crypto, and what was your initial impression?
Yeah, that's always fun. So I first really got into crypto. I got into Bitcoin, and it was in late 2016, and it was right after Trump got elected. And so like my thesis there was like, okay, things are kind of going bad in the world. Like there's going to be a lot of instability. There's going to be a lot of like unrest. And so like it would be great to own Bitcoin. And from there at the time, if you remember, like Coinbase had two assets. It had Bitcoin and Ethereum. And I was like, hey, what's this other one? It only costs $9. And I was like, well, that's Ethereum. And so I bought some Ethereum. And that's how I initially got into it. And kind of just have been diving deeper every day ever since then. So, or late 2016.
Awesome. Right on. And one of the things that I also noticed was that a lot of the things that you're involved with, they almost have this idea of like the betterment of the community or like achieving things that you can't maybe necessarily achieve on your own. Is that something that was instilled in you from a young age or something you're passionate about, or is it just pure coincidence?
That's actually a great question. That's one of the best questions I think I've ever been asked. So yeah, because that is actually something that's really important to me. So my kind of thesis on crypto is that there's sort of two paths for us to take. And for us, I mean, like as a society. One is that crypto, in my opinion, is intrinsically radically individualistic. And you see that ethos a lot reflected in the Bitcoin community, right? It's like, my keys, my coins. It's like radical self-reliance. It's like radical, like I don't need anyone else because I am completely self-sovereign. But I think there's also and so I think that's the natural bent of this technology, like natural bents, right? The industrial age had a natural bent towards community because to operate industrial machinery, you need a lot of people. The information age has a natural bent towards individualism because it's intrinsically individualistic technology. So I think though I think that would be really negative for the world because what that would become is essentially just like rich get richer, strong get stronger, poor get poorer, weak get weaker. I think the counter vision to that though is that we can actually leverage blockchain technology to simplify relationships, to make the creation of relationships more simple, and therefore actually build richer community on top of it. And so that is the thesis that undergirds all of my work, is trying to use technology that's enabled by blockchain, but do it in a way that creates community.
And you mentioned that you got into Bitcoin in 2016, and then that led to Ethereum. But at what point, like, is this your full-time job? Is this what you do now? And when did that shift take place, if so?
Yeah, that's a good question too. So I would say it was almost 2 years ago. It was about 2 years ago that I would say full time. I wasn't like paid to be full time until about a year and a half ago.
Congrats
so
on that.
my background, yeah, exactly. My background is I was in entrepreneurship previously. I had started a company in 2011 that was sold in 2017. So I had some time, I had some money that I didn't need to like work right away. And so I was sort of like, but working on crypto. But I would say I've been full time for about 2 years now, I guess. Even though I haven't been paid full time for 2 years.
Right. It's a question that Wade and I often have because the nature of the crypto space is, it's just a little different than just like traditional business. And so it's often like, for those who are maybe interested in getting in the space from an entrepreneurial standpoint, how do founders pay themselves and how do you generate that sort of, full-time income?
Yeah. So right now, so we raised money for PoolTogether Inc., the company. And so that's who's paying my salary right now. But we are transitioning to like full decentralization where people work directly for the protocol. But I do think it's important to note, so for people who are listening, who are like, hey, I really want to get into crypto, right? So for me, my path was PoolTogether started at a hackathon, the Ethereum Denver hackathon. We won a little bounty at the hackathon. And then from there, we got a grant from the MakerDAO Foundation, which is the creators of DAI. And then from there, we raised money. And so this idea of grants is actually very intrinsic to crypto. Like Uniswap was started with a grant, PoolTogether was started with a grant. And so I would really encourage people who are like listening, who are like saying, hey, I want to get into crypto. There's a lot of protocols that have a ton of money in their treasuries and they really want to distribute that money. And the lack right now in crypto is not money. The lack is qualified people to use that money in productive ways. So I definitely encourage that. And I think that's a viable path for people to get started. Start part-time and then you can do full-time.
That's awesome. Great advice. So yeah, to move on from that a little bit, but before we get into PoolTogether, do you mind explaining what PleasrDAO is and how you came up with that idea?
Yeah. So PleasrDAO is really funny because it's the thing that I've spent the least time on, but it has somehow become the most successful. So how did I come up with the idea? So, and I'm going to presuppose a little bit of crypto knowledge for this discussion. So anyways, there was an NFT that was for sale that I thought was really cool and I really wanted to purchase. It was by People Pleaser, who's this NFT artist specific in the decentralized finance space. And I knew it was going to be more than I could afford. But I really wanted to buy it. And so I just sent out a tweet and said, hey, does anyone else want to buy this with me? Like go create a DAO. That stands for Decentralized Autonomous Organization. Create a DAO, pool our money together and buy it. And some people on Twitter said, yeah, I do. And from that, we basically pooled together. It ended up that we pulled together about $500,000 because that's how much that NFT ended up selling for. I thought it was going to sell for like maybe 100,000, which was already out of my price range. And it ended up selling for like $500,000. So we got that. And it just kind of, I think that experience of like coming together, buying it, created a lot of community excitement. And we then found another NFT that we wanted to buy, which was the Edward Snowden one. That one ended up selling for $5.5 million.
Wow.
And so we raised the money to buy that. And now actually we're also in the middle of a fundraising round for PleasrDAO. And so that's the genesis though. That's a little bit long-winded.
Just sticking on the topic of NFTs, I mean, you're someone who's been involved in the space for a number of years now, but what do you make of all of the hype around NFTs and just the evolution of the NFT space, especially over the last year?
Yeah, I mean, this might be a little niche, but I personally would say I'm much more into DeFi than NFTs. So I would not consider myself really an NFT, expert. I think NFTs are very cool when they represent the kind of canonical ownership of an artist's work. So in the same way, I think a really good analogy is a first edition book, right? Like, because the critique of NFTs is it's a digital file, anyone can download it and use it, right? But that's the exact same as a book. Anyone can buy, East of Eden, John Steinbeck. But the first edition of East of Eden is worth a lot more because it's sort of like the canonical first version. And I think the same way, to me, I'm not huge into like digital art, but what I am very into is artists who mint NFTs that represent the first edition of their works. And that is really cool. And so that's like what People Pleaser did. She minted this video, she created a video and then she minted an NFT that represented like, hey, I'm saying this is the canonical first edition of the work. So that's my my take on NFTs, but I'm not a huge NFT person.
So let's get into PoolTogether, because that's what we want to focus most of the conversation around. So first off, for somebody who's maybe a member of our audience who hasn't heard of it, do you mind just explaining what PoolTogether is?
Yes. So PoolTogether is a protocol for prize savings on Ethereum. And that may not make any sense, but first off, like, what is prize savings? Prize savings are a very, very cool idea. Prize savings, AKA no loss lotteries, otherwise known as no loss lotteries. The basic premise is it's a savings account. You can deposit money, you can take it out whenever you want to, but all the interest earned on everyone's money is combined and given out randomly as prizes. And so, so basically you deposit money and you have a chance to win, like right now with PoolTogether, basically around like $100,000 every week. I think in the last 9 weeks, the protocol has distributed over $2 million in prizes across like 6 different prize pools.
Wow.
So that's the idea. And it sounds really simple, right? And at first it almost sounds kind of gimmicky. It's like, okay, that's cool, but like, what's the point? But if you actually think about it economically, it's really interesting because it's the only financial instrument that gives people a chance to have an exponential return without taking on principal risk, right? So typically, if you want to have a chance to 100x your money, the only way to do that is to do something that's extremely risky, like, leveraging stock trades or leveraging your ETH buys or whatever. So what PoolTogether does, what the protocol does, is enables people to have a chance to have exponential returns without risking their money. So I think that the luckiest person so far in PoolTogether, they deposited like $76 and they won $43,000.
Crazy.
So there's no other financial instrument where that's possible.
Yeah.
So anyways, PoolTogether is a protocol to facilitate prize savings on Ethereum.
Well, and this is one of the things I love because I've got that, what's the word? Just the temptation to gamble sometimes, right? Like a little bit of fun and that kind of thing. But the great thing about this is that I'm not risking, like you said, that principal amount. So it's a very safe way of satisfying that side of things. It's probably difficult with a DeFi protocol like this, but do you have a sense of who the majority of PoolTogether users are, or at least kind of like the majority of savings amounts that's going into the pool?
Yeah, so it's very interesting. So first off, one comment is it's very global. So like the number 2 country to visit PoolTogether is China. And the majority of our traffic comes from non-Western countries, like non-English speaking, like not Western Europe or North America. So it's a very global audience. And there's sort of 2 tiers of people who use PoolTogether. There's people who literally deposit $20 million who are, whales. Yeah. And they're really doing it more for an economic incentive because they're basically running the numbers. And because right now, if you use the PoolTogether protocol, in addition to having the chance to win prizes, you also earn the pool token, which effectively pays you like a 20% APR. So there's the whales. And then there are a lot of the smaller fish, which would be, if we were kind of liberal, we would say like anywhere from 0 to 10,000, but really like $0 to $1,000. And those are the people, if you have $1,000, sure, you can earn 10% APR on your money. But even if you're earning 10% APR, that's $100 a year. That's less than $10 a month. Is that really going to like move the needle for you? No. So it really makes a lot more sense actually to put that in PoolTogether, where you have the chance to earn $100,000 every week. And sure, maybe that's not realized, but you at least have that opportunity, and earning, $10 of interest or $8 of interest a month isn't really that interesting.
So you mentioned, and you mentioned that, maybe it isn't realized. Like, what are the odds of winning? And do the odds like change if you have a different amount in the pool?
Yes. So they change every day. They change. Yes, they change. The odds are directly proportional to your deposit. So if you have a small deposit, so like right now, the USDC pool, I think, has like $80 million deposited. So if you deposit $1, you have a 1 in 80 million chance of winning. So very, very, very small, right? But I will say that's once per week, right? So that's compounding, every week. There also is the newest thing that's being launched is this thing called pods, which lets people combine their tickets together and split the prizes. So if you're a small depositor, you can combine it and split.
It's like pool together in a pool.
Yeah.
We're doing it in 7.
Yeah.
So one thing I'm curious about, Leighton, is this idea of the loot boxes, or so this is what I can't wrap my head around. Like, what is the incentive other than like the goodness of people to add extras to the? First off, I guess if you could explain what the loot boxes are, but why would somebody be contributing to this?
Well, so first off, I'll explain it. Like this concept of permissionlessness, that might be a word you hear thrown around a lot in crypto. It's a very cool idea. And it's basically this idea that you don't need to there's no permission to do things in crypto. That it's completely open to anyone. And so what the loot box is it's a way for anyone to permissionlessly add additional prizes to the Pool Together prizes. And so literally anyone in the whole world can be like, hey, I actually want to add $1,000 this week to the prize. And they can just send the tokens and they automatically get added to the prize. So I think the first answer to your question is that we just want to support permissionlessness in the way the protocol is designed. In terms of who does it, it's really people who are doing it for sort of marketing purposes. It's like, hey, there's a lot of people who use Pool Together. There's a lot of people who look at this. And so I just want my token to be there. So I'm going to send $100 or $1,000 to my token. So it's not, the loot box is not like a super important part of the protocol, but it is cool to illustrate that principle of permissionlessness.
That seems to me like we were chatting about this before, and it was the only example that I could come up with, because we've seen it before with big name, artists or popular people in general, where we learn of their public wallet for their Ethereum, and then all of a sudden somebody's depositing their favorite crypto into their wallet. It sounds like it's kind of like the same mechanism to, again, just marketing purposes. Is there any reason outside of that you would be aware of why someone would use it?
No, they're not really. I think no. I mean, there could be reasons, like governance could come up with something. They could say like, hey, if you send in this token, you'll get this token out. But as of today, no. But yeah, that's a great analogy too, with people doing that. They'll like send tokens to someone's wallet just so they show up.
Yeah.
Some of the prizes that you mentioned there are significant, right? Like, and these are on a weekly basis that they're being given away. How has that growth evolved? Like, I'm guessing a year ago, the prizes weren't that size. Like, how have you seen that grow over the last year?
No, I mean, a year ago, they were probably like $300 a week.
Wow.
And right now they're like $200,000 a week in terms of that's a couple different prize pools. But yeah, I mean, the prizes, they change all the time because interest rates are changing all the time. But in generally speaking, I think like the lowest we probably had in the last 12 weeks has been like 150,000, and the highest has probably been like 250,000. So sort of in that range. But yeah, like everything in crypto, Pool Together has grown a lot in the last year. And I think, I think we're just kind of scratching the surface, really. I mean, prize savings in the traditional financial world is already, the estimates vary, but at least $200 billion are deposited in prize savings accounts right now around the world. And by being on a blockchain, that's already like 10x better. And then also lotteries are hundreds of billions of dollars a year in spending. And so really the total addressable market is hundreds of billions of dollars. So our next goal is to get to $1 million weekly prize. But I don't think a billion dollar weekly prize, as crazy as it sounds, it's actually not impossible if you strictly kind of look at it from a first principles perspective.
Is bigger always better? Like, or has there been any, even just with where you're at now, is it at all like, are people turned off because although the prize pool is bigger, it's also the odds are lower, right? I would think it works that way.
Yeah, so people definitely are. There are definitely people who are turned off by that. That's a tricky balance for us that we're still navigating. Is like, what's the optimum distribution? And what I mentioned earlier with the pods, I think that's a crucial piece. Is that essentially lets people opt into like whatever. So it's like it's $1 million prize. You can either put $100 in and have a very, very small chance of winning, or you can join with like other people who have $1 million and then split a prize and get a return that's smaller. So I don't think we've totally cracked that yet in terms of what is the optimum distribution. And so if anyone's listening who has an interest in looking at that from either like a behavioral economist or a psychological standpoint, that'd be a great grant to apply for.
Ulf, do you realize that our audience has either been watching or listening to this episode for 20 minutes?
20 minutes? They should probably subscribe.
Yeah, they should subscribe and they should like and comment and hit that notifications bell.
Oh, and did you tell them about the NFTs?
That's right. We have our own NFT for our OG supporters. This is a way you can support our show, help us bring you continual great content. Information on that is below. So some people have different theories on bull market cycles and bear market cycles and that kind of thing. I mean, first off, what are your thoughts on that and how that might change adoption? Because like the two biggest ones are DAI and USDC. And so do you think that right now we're in a bull market where everything's going up? Do you think that when things go down, maybe more people going into stable coins might impact that? Any theories there?
Yeah, well, and as it relates to PoolTogether specifically, what I like about PoolTogether is I think the value prop stays strong in bull and bear markets, because in bear markets, more people want stable coins, more people just want to save. So that's great. In bull markets, interest rates go higher, prizes get larger. And so that's good too. In terms of where we're at in the market cycle, we're obviously in a bull market. It's exceeded my imagination, honestly. If you had asked me a year ago today, I think ETH was at like $180.
Yeah, that's crazy.
So yeah, if you had told me a year ago today that like ETH would be at 3,000, I would not have believed you. And I think the converse is also true in crypto often, right? The thing about crypto is it always goes higher than you ever think, and it always goes lower. And so to the listeners, be careful out there. I'm obviously almost all my money's in crypto. I'm obviously super bullish on this. I'm not selling my Ethereum or anything, even though the price is super high. But we're obviously in a bull market, and I totally expect to draw down at some point. I just don't know when. I'm not a trader.
Yeah, fair. In regards to going back to those $2 million plus accounts who come in, the whales in PoolTogether, is there any risk or anything about those types of players being able to manipulate the system? Or is it kind of like, well, you put more in, you have a higher chance, but that you're also contributing to the overall prize pool?
Right. Yeah, it is more. It's more that. So it's not really manipulation. It's interesting if you think about it, because basically what the whales do, like the whales have, yes, they have a very high chance of winning the prize, but the prizes are actually insignificant on a percent basis compared to the deposit, right? So if there's $100 million and you have $20 million in there, let's say you do win $100,000, but $100,000 on $20 million is actually not a crazy high return.
Right.
Like you could get a similar return in other places. But then what the whales enable is it enables people who don't have a lot of money to have access to at least the opportunity for a $100,000 return. And so it's kind of this give and take where, some people hate whales. I don't hate whales at all, because what whales do is they do win. They win a proportional amount of times, but the small holders also win. We actually have like a list of like the luckiest winners ever. And there's, even in the last 12 weeks, there's been like 10 different people who have, at least like 100x their money. And if it wasn't for the whales, they wouldn't have that opportunity. So yeah. It's actually a really interesting like game theory economic analysis. But basically what PoolTogether does is for large holders, it offers a chance to get slightly higher than average APRs. And for small holders, it offers a chance to get low frequency, but super high exponential returns.
I mentioned DAI and USDC are the top two. There's a few others. I know Uni, for example. Any thoughts of adding more coins to PoolTogether?
Yeah. Well, yes. We just launched on Polygon, the layer 2 for Ethereum, and so we just integrated with Aave and Yearn. So there are more prize pools coming, but there is this tension too. between, how much do you prioritize one and sort of have like one really big one and then a bunch of little ones, versus do you treat them all equally? And so that's something that kind of PoolTogether governance is sorting through right now. So we'll see how that pans out. But certainly do expect there to be a lot more prize pools. But also I expect that there will probably be one or two that are sort of like the really big ones.
And touching on, layer 1 and layer 2.
Yeah.
Obviously the main benefits for everyday users with layer 2 is the lower gas fees, but that also comes with, it may be minor, but it comes with some sort of user experience challenges as well, right? It's not what they're used to then, utilize that layer 2 network. So I guess I'm just curious, has gas fees for PoolTogether at all, cause challenges or limitations on entry for those smaller users who want that opportunity at a big prize, but it's not worth it because of the gas fees? And, is layer 2 helping to maybe change that?
Yeah, gas fees have definitely caused problems, like in terms of just boxing out a whole segment of users, of people who have like, let's say, less than $1,000. It just doesn't make that much sense to deposit. And layer 2 has really helped with that. So for example, the Polygon prize pool that launched last week, it launched actually 6 days ago, so less than a week ago. It already has, I think, almost 1,000 unique deposits into it, which, the comp prize pool that's been around for like 2 months has like 500. Wow. And obviously one's USDT, not as many people hold comp, so that's part of the reason. But we certainly see a very, very direct correlation between when gas prices go lower, deposits go up. When they go higher, deposits go down.
You mentioned this whole idea of no loss lottery came from the non-crypto space. Like, where specifically is this being done?
Yeah, the biggest program in the UK, it's called premium bonds, and it's the exact same concept. It's like deposit, no interest. It's a little different because in PoolTogether you actually get interest, but in the UK it's like deposit, no interest. And they have in the UK alone they have $100 billion deposited. They earn like 1.2% yield on that, so they pay out like $1 billion a year in prizes. And so that's the biggest. So obviously, because it's big in the UK, a lot of like former UK colonies have it's quite popular. In the United States, it is getting more and more popular because it was only legalized federally in 2013, so it's fairly new. But those in South America, it's very popular in South America. A lot of banks offer prize savings programs.
And then when it comes to the actual like token, the pool token, for our audience who maybe doesn't understand like what the benefit, like, is that something like from a speculation piece, or does that give a governance piece, or how does that work?
Right. Yeah. So it's a governance token. It's not something to speculate on. It's so the pool token controls the protocol. And so that's a really amazing thing, actually. So like I literally, I was part of the team that built the protocol, but I don't control the protocol anymore. I actually don't even, I do have pool tokens, but I haven't even activated them for voting because I want the community to really be able to take control. And so all changes to the protocol are controlled by the community. And so basically what the pool token holders need to do is decide some of these questions that we've talked about, right? Like, which new assets should be added to the protocol? How many prizes should we have? Should we have a lot of small prizes? Should we have one really big prize? How often should prizes be awarded? The pool token holders govern the whole system. It's a really, this is sort of the new paradigm of crypto, is that the cool thing is if you use the protocol, you become an owner of the protocol. So you will get the pool token if you deposit into the protocol. And so that's really cool.
And the fact page on the website says that PoolTogether doesn't make money. So, that said, how was it all funded? How does it operate? What's the incentive to be involved? Is it the earning of the governance tokens, or how does that run?
Yeah, so in the playbook in crypto is a little bit different. Like, you should sort of think of companies as, like if you're building a ship in a dock and then you sort of like push it out, And then at that point, the doc doesn't become relevant anymore. Like that's sort of the model for crypto, right? Like the company did build this protocol, but we really shipped this protocol out, and no longer do we need to no longer do we control it. So what we can do as a company, though, to make money as a company, is to help other people integrate with it, build services on top of it, and this is sort of the standard like open source software model. And so, yeah, so that's really the idea for PoolTogether Inc. The company is we will make money by providing services on top of the protocol.
That's a good analogy, because we've seen a couple of these examples that are exactly what you're explaining. Yeah. But I like the doc setting the ship out, and so I guess how do you see PoolTogether growing moving forward? I mean, you mentioned that the prize amounts in general, but how else do you see it growing?
Right. So, I mean, I think there's a few ways to answer that from a kind of sort of from a crypto perspective, right? We see a lot of integrations into other protocols. So that means, these no loss prize pools that use different yield sources, have different asset types, things like that. So that's sort of at the protocol layer. On top of the protocol, I think the thing that's really exciting is people integrating into it. And so one thing for people in the United States, just like 2 weeks ago, there's an app called Dharma. And so you can download, and Dharma integrated with the protocol, the PoolTogether protocol. And so now you can download the Dharma app, and you can use the Dharma app to deposit straight from your bank account into the PoolTogether protocol. And so those are the types of things that, like 5 years from now, I don't care if anyone's heard of PoolTogether, but the idea will be you'll be at your local bank and they'll be like, hey, do you want to put some of your money into this prize savings account? And on the back end, that will be using PoolTogether. So that's really the model we're going for.
I love it. Leighton, this has been a super interesting episode. Love all your answers and done a really good job explaining everything. We like to end every episode of Show Me the Crypto with a little 3-question segment, which we call You Had Me at Crypto. So I'm just going to ask you those questions.
Sounds good.
All right, Leighton. Who's your favorite person to follow in the crypto space?
Oh, man. I mean, I got to say, Crypto Cobain is the best. If you want to find a trader, he's an amazing trader. I've been following him since like 2017. He is a really, really good trader. I can't endorse all his content. He's a great trader though. Robert Leshner, who started Compound, he's a great follow. He's a great person.
I've been trying to get Robert on the show. Maybe he can help us out there.
Okay, yeah, I can ask him for sure. Yeah, I'll talk to him.
Cool. All right. Question 2. What will the price of Bitcoin be 10 years from now?
Man, someone asked me this on a podcast like last year, and they were like, and I just got it so wrong. You said 10 years from now?
10 years, yeah.
I mean, it's either going to be 0 or it's going to be like $1 million, right? It's going to be like $1 million or it'll be 0. It's pretty binary. I do think I don't know. 10 year on a 10-year time horizon, because like I'm thinking about quantum computing. I'm like, man, is Bitcoin going to survive that?
Yeah.
I think the future. I do think if I had a bet on the odds, I would say I'm holding my Bitcoin for 10 years.
Cool.
There also is maybe 30-40% that it's just 0.
Yeah,
in my opinion.
It'll be very interesting to see. We've had many guesses as to where it's going to be. I think everybody's going to be wrong. So,
exactly.
Yeah, that's only certainty, right?
Yeah. All right, 3rd question here. What is the most underrated coin or project in crypto?
Other than PoolTogether.
Yeah, exactly. So underrated. So I'm trying to think about like ones that are really specifically underrated. Oh man. I mean, this is a boring answer. Honestly, Dharma is incredibly underrated. I know it's not a coin, it's a project though. It's very, very underrated. That team has been around for a long time. They actually invented the term DeFi.
Really?
But very, very underrated. Etherscan also very underrated. Again, that's Dharma and Etherscan are both sort of in this like tooling, because like all the attention goes to the tokens because it's speculation and whatever. People want to like see numbers go up and down. But you got to give a shout out. You got to give a shout out to the builders who are actually, contributing a ton of value and doing it in a way that doesn't necessarily have the same sort of like, speculative angle to it. So I would say Dharma and Etherscan.
100%.
I downloaded the Dharma app like when it was first launched, and admittedly, I haven't it wasn't of much use at the time, and but it was like brand new, so I got to go check it out again and see what it's all about.
Yeah, it's changed a lot, and it's really good. It's really good for people who are newer. Like if you already sort of have MetaMask and you're already in it all, maybe you don't need it, but it's really good if you're starting out.
Cool.
Awesome. Well, there's a ton of value on this episode, Leighton. Thank you so much for joining us on Show Me the Crypto.
Yeah, thank you guys. Appreciate it.
Thank you for listening to Show Me the Crypto. Please make sure to subscribe as well as rate and review this podcast.